Hello, everybody. Welcome and thank you for attending this live market briefing dedicated to DRAM and NAND memory markets powered by YOL Development. I am Léonore Martin, Marketing and Communication Officer within YOL Development. Our session today will last about 40 minutes, during which our analysts Mike Howard, VP of DRAM and Memory Research, and Walt Kuhn, VP and NAND and Memory Research, both at YOL Development, will present you a quick look back at 2020 to review the recent history of the memory markets before focusing on the near and mid-term prospects of the NAND and DRAM markets. It will cover market dynamics, supply, demand, pricing, and profitability. Before we get started, I remind you that you are encouraged to submit questions to our analysts during all the live events using the Ask a Question window at the bottom of the screen. Questions will be answered right after the presentation. In case we don't have time to answer all of them, we will follow up with you by email. To conclude, this live event is recorded. You will receive tomorrow an email with the link to access the recorded session. So now we are going to start with the presentation. Mike, Walt, the floor is yours.
Thanks for the introduction. This is Walt. So I guess before we talk about our expectations for this year and the near term, what we see as a potentially record-breaking year for the memory industry, I want to spend a few minutes looking back at how we saw the market entering 2020 before COVID really turned everything upside down. Next slide, Mike. But first, I'd like to start by looking even further back at the last big run-up in the market to provide some context for where we see things heading today. So this slide is looking at our outlook for the market as we entered 2020. On the left is a chart showing industry revenue for both DRAM and NAND. And on the right, a similar slide, but looking at operating profit. So early 2016 marked the bottom of a major memory downturn. And over the next few years, both memory revenue and profitability exploded, hitting record levels in 2018. DRAM and NAND industry revenue exceeded $160 billion in 2018, and operating profit was higher than $80 billion. So it was just a fantastic year for the industry. And in the midst of this upcycle, it kind of felt like maybe a new era had dawned on this historically volatile memory segment, but it turns out that those hopes were unfounded. As we've seen time and time again, rising revenue and profit for the memory suppliers is often coupled with rising investments and sometimes an overly optimistic outlook on demand. And eventually what happens is, supply growth from the suppliers ends up exceeding market demand and prices crash. And that's exactly what we saw starting in late 2018. Both markets, fell significantly. And as we exited 2019, the NAND market had, started to turn the corner, but this was after a year of huge losses for the industry. So as you see in the chart there, NAND fell, quite negative in terms of profitability. So it was, fortunately, though, things were starting to turn exiting 2019. The DRAM market was still falling, however, but you'll notice that profitability levels, even through the downturn, remained fairly high, especially relative to historical downturns. And we did expect the DRAM market would turn the corner in early 2020. Both markets were expected to bounce back, as I mentioned, in 2020, as reduced investments during 2019 would lead to slowing bit growth in 2020, which would coincide with our expectations for pretty strong rebound in demand as 5G smartphones were rolling out, and we expected data center to be pretty strong as well. Unfortunately, the pandemic hit, which really kind of threw this outlook out the window. Okay, go ahead and click through. So here we're looking at demand and kind of our views of how the pandemic impacted both first and second half demand for DRAM and NAND. It's an interesting dynamic going on here, and the story is pretty similar for both NAND and DRAM. What we saw was a pull-in of demand in the first half, which was caused, largely by the work and learn from home transitions increased video streaming, increased gaming, and I guess just a general increase in online activities. There was also a pull-in of memory purchases as some customers built inventory due to concerns about possible pandemic-related supply chain disruptions. So you may recall early in the pandemic, there were fears that the supply chain was going to have some severe issues. Those turned out to be mostly unfounded, at least from the memory perspective. So, as demand fell off in the second half due to economic weakness and inventory digestion, the markets suffered as a result. Next slide. Due to the nature of the demand shifts, it actually turned out to be a great year for notebook PCs and Chromebooks. And you'll see that here. This is showing kind of our assumptions around unit shipment impacts from the pandemic for a few key segments. So as I mentioned, PC shipments ended up getting a pretty big bump from the transition to work and learn from home. Server shipments were slightly above expectations as data center demand, especially in the first half, was quite strong. But smartphone sales were well below our initial projections. We assume people delayed phone upgrades as the economy weakened and a lot of people were out of work. Next slide. So this slide's looking at our view of the COVID impact to memory revenue. The green bars you see in the DRAM and NAND charts are kind of where we saw that revenue pull in, as I mentioned previously, where the transparent gray is revenue that we expected that didn't end up happening. So you'll notice first half memory revenue exceeded expectations due to the demand pull-ins we already talked about, and that coincided with rising memory prices. Not surprisingly, revenue was below our expectations in the second half as demand weakened. Based on our models, lost memory revenue due to the pandemic was in the neighborhood of $5 billion. So it was not an insignificant impact. Next slide. This is the same view as the prior slide, but looking at industry operating profits. As you may have guessed, higher operating profits in the first half were offset by lower than expected profits in the back half. I'll also note, while we have it up here, if you look at the 2019 profitability for NAND, you can really see those huge losses that the industry suffered in that year. And as a result of a weaker second half of 2020, the memory markets exited the year in a much weaker position than they would have absent the pandemic. The expected strong recovery in 2020 was muted at best. But on the positive side, I don't think the recovery was totally lost, but instead likely delayed into this year. And I think that's where I'll turn it over to Mike and he can talk about our near-term outlook.
All right, thanks, Walt. So I'm going to talk about our market outlook, and basically what I'm going to do is I'm going to look at the fundamentals of both supply and demand and try and highlight where we expect things to sort of diverge from sort of the historical trends over the next couple of years, because I think those are the areas where things get interesting. We can expect the dynamics of the overall markets to shift. So we're going to start out with supply. And first thing we're going to look at with supply is Capex. And really kind of different dynamics across DRAM and NAND. As the market conditions worsens for DRAM in sort of exiting 2018, pretty significant cuts in Capex in 2019 and again in 2020. As COVID kind of gripped, the DRAM suppliers pulled back pretty aggressively. And there's only 3 suppliers, so they have the latitude to do that as a more consolidated industry. As we look forward, we do expect Capex to return this year, growing about 20% and a similar amount next year. And again, as Walt alluded to, DRAM is pretty profitable, and as such, when things look good, they have the money to spend on DRAM. And long term, they certainly are going to need to spend Capex to continue to grow bits. Now, NAND is a slightly different industry, a lot more players, and lower profitability overall. And you can see that the Capex doesn't fluctuate quite as much. On the one hand, there isn't the profitability there to just go out and spend a bunch of money in the good times on additional production capabilities. But on the flip side of that, in the bad times, the suppliers can't pull back too much on NAND Capex because there's the threat that one of the other players will continue to spend and grab market share and really compromise the supplier's position in the industry. So a little bit flatter dynamic to NAND Capex, more volatility to DRAM, and DRAM certainly seems to have the possibility of spending higher amounts should they need to, driven by their profitability. So that's our outlook on Capex. And now we're going to look at sort of how that bleeds into actual bit supply growth. Now, the first thing we're going to look at here is growing the density on the wafer. Do we expect something dramatic to shift here? And the short answer is not really. You know, if we look on the left there, the green line is sort of absolute gigabits per wafer, sort of a steady line. The white line is year-on-year growth. And we expect year-on-year bit density to grow sort of in the 13–15% range. So not, you know, departing dramatically from historical. We don't see any sort of step functions coming for DRAM bit growth on the wafer. And a similar story for NAND, sort of growing in the mid 20% range. Now, you'll notice it's coming down quite dramatically from 2019. And what you're seeing there is the lingering impact of the conversion to 3D NAND. But now with the industry essentially fully converted or mostly converted to 3D NAND, we expect it to reach more of a steady state in sort of the mid 20% year-on-year bits per wafer growing. Now, could it grow faster? Absolutely. But we see really two headwinds to it growing faster. First of all, you've got customers. Customers do not want to constantly be having to requalify products. So you need a certain period of support for products, which means you can't, you know, you can't constantly be converting all of your wafers to the leading edge process node. And also, you know, I think perhaps more importantly, particularly for NAND, the cost to do something like that would be very expensive. For either NAND or DRAM, to convert all wafers to leading edge would be prohibitively expensive. So we don't think that's likely to happen. And for both DRAM and NAND, we don't see any technological event happening, particularly in the near future, that would lead to sort of a step function in bit density growth on the wafer. So takeaway, density growth on the wafer is going to be pretty steady and in line with recent historicals for both DRAM and NAND. If we look at production growth for DRAM first, you know, we have production forecast to grow in the 18% range this year, climbing up a little bit next year to 19%. And really this is being driven by Capex. As suppliers invest more this year, we do expect production growth to inch up. You know, the question of could they grow bits more quickly this year? I think on the margin, the answer is yes. But, you know, we're here in April and the production story for 2021 for DRAM is pretty much written. There is certainly some impact that could happen in sort of later in the year, sort of Q4 timeframe. But when you look at how long it takes to order equipment, install equipment, qualify equipment, and then get wafers through the fab, really the production picture for 2021 has already been drawn. So then you have to look at 2022, ask the question, could production growth significantly exceed what we're forecasting? Short answer, absolutely. It could. Money could be spent. There is some spare capacity out there, empty clean room space that could be ramped. But given sort of where we see suppliers behaving based on historical trends and with our conversations with equipment suppliers, we think that production growth next year is still going to be sort of in the high teens, maybe 20% range. But there is the possibility that it could grow faster. The NAND side, again, really a story of, you know, you saw the Capex slide, and why we do see fluctuations. They're not dramatic fluctuations in Capex, and as such, we wouldn't expect dramatic fluctuations in production growth. We're looking at about 32% this year, trimmed down a little bit next year to 31%. Those numbers certainly could shift depending on market dynamics, but we don't think dramatically. I will point out that while this isn't necessarily related to production, the current disruption in controller shipments, which we think we're going to see impacts of that into the second half of the year, that is limiting shipments. So it's not impacting production necessarily, but it will limit shipments, which for an end customer looks like a production shortfall. So effectively shifting shipments from the first half of this year into later this year or even into early 2022. So it's not an insignificant impact on the market, but it's not impacting sort of the fundamental production of NAND bits and NAND wafers. So that was our outlook for supply. To summarize, it's expected to be in line with recent historicals. We're not expecting any step functions, either upwards or downwards in production capability or output in the next 2 years. On the demand side, we're going to look at the 3 big segments, server, smartphone, and PC. And again, try to highlight any dramatic departures from recent historicals, because we think those are the areas that will either push the market strongly into over or under supply. Server shipments, which actually, 2020 wasn't a bad year for server shipments. This white line is year-on-year growth. The dashed line is the rolling 5-year average. Last year, above average growth in server shipments. Part of this is based on a pretty weak 2019, but it wasn't a bad year. Looking at 21 and 2022, we're expecting this year to essentially be in line with that recent average and falling off slightly next year. You could argue that this is a rather conservative forecast, but that's important to keep in mind that if anything, there's likely upside possibility to our outlook for server shipments. And then coupled with that is sort of how much memory do we expect to grow per server. On the DRAM side, which is this green line, and it's on the left axis, again, expecting it to grow sort of in line with recent historicals, about 25% year on year. Certainly potential for it to grow faster with the change in architecture coming from Sapphire Rapids and Ice Lake going to 8 channels. There's a potential for faster bit growth. But our outlook and what our model is based on is keeping it generally in line with recent historicals. NAND, you see a fall off in 2021, but if you look at sort of the average of the last few years, you can see averaging 19 and 20, you basically get a number which is very similar to 2021 growth. So slightly decelerating off of last year, but an acceleration compared to 2019. So again, we're not expecting dramatic content growth for either DRAM or NAND. We're not expecting content growth to be dramatically different than recent historicals in server. Smartphones, really the story here is unit growth, because as you can see in the right-hand chart, content growth is steadily decelerating for both NAND and DRAM. But if you look at the left-hand chart, pretty bad year last year for smartphones. Shipments were down mid to high single digits %. We're expecting a recovery basically in 2021 of those shipments, with shipments growing 6% this year and 3% next year. And this shouldn't come as a surprise. People postponed handset replacements in 2020 due to the pandemic. And so now they have a phone that's a year older. It's got an additional year of cracks in the screen, and the battery's that much worse. And so we do expect some recovery in that demand. And so this is certainly going to be a tailwind for both DRAM and NAND in 2021. And we expect some impact also in 2022. Now, PCs is a segment which, particularly for DRAM, has been a shrinking segment for the last 10 years. But this was really the surprise story of 2020, with PC shipment growth certainly exceeding the recent historical trends, and really the first strong recovery in PC shipments that we've seen in a long time. We again expect PC shipments to grow in 2021, sort of exceeding that 300 million units number. Last year, we have PC shipments at about 280 million. So continuing to grow in 2021. So this is certainly going to be a tailwind for both DRAM and NAND before 2022 hits and we sort of get that full pandemic impact behind us. We expect things to return more to basically where PC shipments would have been on the long-term historical trend line. Content per PC for both DRAM and NAND continuing to slowly decelerate. Again, nothing dramatically different than recent historicals when we look at content growth. So really the story for PCs is strong unit growth in 2021, but that falling off in 2022. And so if we add all this up, especially looking at those three big segments that we've highlighted, we get a picture of total bit demand growth. And DRAM certainly this year is looking at very strong demand growth. You know, for the last sort of 4 or 5 years, we've seen demand growth in the high teens to low 20% range. So for this year to come in at 25% is certainly much stronger than we've seen in the last several years. On the NAND side, we are expecting a slight decline in bit demand growth, but again, not a dramatic departure from recent historical trend lines. So in general, this is, you know, we've got a stronger than expected year for DRAM, a year of demand growth sort of generally in line for NAND. It's this summary, it's a pretty good year for overall memory demand taken as a whole. So we've talked briefly about supply and where we expect that to be. Again, basically supply steady and in line with recent historicals. The demand side, slightly stronger on the DRAM side, but generally in line with recent historicals for NAND. And when we couple demand with supply, we get sufficiency. And coming into this year and sort of looking at the next couple, the next 2 years, standing in Q1 of this year, on the DRAM side, it looked like Q1 would be slightly oversupplied, followed by a couple of quarters of undersupply before returning to an oversupply in 2022. And when we did fundamental sufficiency analysis, we had a similar trend in NAND with oversupplied in the first half of 21, undersupplied in the second half of 21 before returning to an oversupplied market in 2022. The thing is this is sort of fundamental sufficiency, but it turns out that the supply chain reacts to what they anticipate. And so the anticipation of tightness in the second half of the year resulted in demand pull-ins. And so when the market expected a shortage in the second half, what it did was it built inventory in the first half. And what we're seeing right now is, you know, a modified sufficiency that, you know, we're in basically an undersupplied market already, and we were in Q1 based on those demand pull-ins. And so when we see an undersupplied market, what we expect to find is prices going up. And that's what we saw. If we look at, here's Q1, prices fell slightly for NAND, but we're up for DRAM. We expect them to be up again strongly for DRAM, really peaking in Q1 of next year. NAND prices expect to peak in Q2 of this year. Again, NAND, you know, a big driver behind this, there's pull-ins and increased demand, but also the fact that some of those shipments have had to be postponed or pushed into the second half of 2021 due to the controller shortage has also adjusted the pricing dynamic for NAND. But both memories right now experiencing sort of a rally in prices, which ultimately increasing prices, shipments always essentially increasing. We do expect revenue to increase. NAND revenue peaking sort of Q4 of this year, and DRAM revenue peaking in Q2 of next year, and essentially plateauing because we don't expect, again, we're not anticipating step functions or dramatic shifts in supply or demand over the next couple of years. And so while we do expect to move into a period of softer pricing in 2022 for DRAM and NAND, we're not expecting things to fall off a cliff. To put these numbers all into context, peak quarterly memory revenue is expected first half of next year and Q2 of next year at $50 billion. For annual revenues, we're expecting this year to come in at 163 billion and next year to come in at almost $200 billion for NAND and DRAM combined. And to put that into context, Walt spoke about this earlier, but the peak year for memory in 2018 was $160 billion. I think there are a lot of elements of our outlook that are rather conservative, and even still, we get the memory markets up to close to $200 billion next year. So it's certainly, from our perspective, looks like the memory markets are setting up for a strong rally and a prolonged rally that's going to lead to record revenues and strong profits for both DRAM and NAND over the coming year or two. And with that, I want to thank everybody for attending. That's just a brief outlook, our brief outlook of the next 2 years for the memory markets. And I'd like to open it up to questions.
Okay, well, thank you both for this presentation. So yes, indeed, we will use the remaining few minutes to answer some of your questions. So maybe the first one for you, Mike. What is your level of confidence that the DRAM market will shift to an oversupplied market in 2022? And what is the chance it will remain balanced?
Yeah, so I've followed this industry for quite a long time, and it always seems like there's the potential that, you know what, there's only 3 suppliers that are going to remain disciplined, and we're going to see a balanced market for a long time. Why would they overproduce? And there's no good reason to overproduce, and it would seem like they would be able to keep this market in balance, but just sort of that experience lends me to believe that there will be overinvestment and push the industry into an oversupplied market. Now, with that said, I think there is strong demand across all semiconductors right now. And DRAM doesn't, or NAND, they don't operate in a complete vacuum. And part of that is that the DRAM suppliers buy equipment from the same companies that TSMC buys equipment from, that Intel buys equipment from. And so there is a possibility, as we look at 2022, that the supply growth will be lower than what we're forecasting, based on DRAM suppliers' ability to buy equipment. And so if the equipment market remains sort of tight, then perhaps DRAM is a little bit, growth is a little bit lower. And I also point to some of the comments recently out of Micron, where they, Micron's recent quarterly announcements, where they talked about Capex discipline and things like that. If those comments actually bear out, and there is Capex discipline into 2022, then I think it is reasonable that supply growth is lower, that the market remains tighter, and we don't see the fall off in prices in the second half of 2022. Probably not going to see prices continue to climb, not back to 2018 levels at least, but even flat pricing is sort of up revenue and increasing margins for DRAM. So, it's my experience that things move in and out of under and oversupply, and that's part of what has fed into our model for 2022. But I think there are some very good arguments to be made that the DRAM market remains a little bit more balanced in 2022, and prices remain essentially flat.
All right, thank you. So second questions for you, Walt. What are your thoughts about the recent article suggesting Micron and Western Digital are looking to acquire Keoxia?
Yeah, so that's obviously been a big topic of late. I mean, I think the article didn't provide a lot of solid data. It's highly speculative, but it's not surprising that these talks are ongoing. If you followed Yole for the last few years, we've been talking a lot about consolidation and the need for consolidation in this industry. It would be a huge positive for the market in the longer term if either one of these deals were to occur, especially if it ended up leading to kind of what we consider the final consolidation step. And back at Flash Memory Summit in 2019, we talked about consolidation and our views on it, and we had a scenario we called the endgame consolidation scenario, and it actually involved SK Hynix and Intel tying up, and that's already underway. And the final step was a combination of Micron, Western Digital, and Toshiba Memory, which is now Keoxia. So that's kind of what this article was discussing. So yeah, if we start moving in that direction, that's going to be huge for the industry. These kind of deals are very difficult to execute in reality. So I still think it's probably equally likely that we'll see a Keoxia IPO in the not too distant future. Because there are some big issues around this, not the least of which is getting approval from China. So, right now, given the relations between the US and China, I think getting approval from MOFCON might be impossible. So we might first need to see a improvement in those relations. And then also the valuation mentioned in the article, I think it was around $30 billion. So that's a pretty big hurdle to overcome. But, I think it needs to happen, and I wouldn't be surprised to see it happen. But again, there's a lot of things that need to go right for it to occur. I think there was also a question on SK Hynix potentially using their position to get in on this kind of deal. I don't think it's very likely we'll see Hynix, go for Keoxia, at least not as much as I think it's lower odds than we'll see for Micron and Western Digital. And I think largely comes down to the maybe lack of history of SK Hynix, doing acquisitions, as well as potential, Korea, Japan strains, which make that kind of deal maybe less likely to be accepted on the Japan side. So that's my thoughts on that one.
Okay, thank you. For you, Mike, another question. Do you think the shortages of other semiconductors will impact DRAM demand?
Yeah, so that's interesting. So I think the shortages in other semiconductor is going to it's having a lot of impact. So a couple of things. First of all, I think there's a sense out there that companies have been caught sort of unaware and have not been able to buy the full suite of semis that they wanted to buy. It's because canceled orders or whatever during COVID, and now they can't get what they want. And so I get the general sense out there that even though a company, say, can't ship a product because they can't get a controller or something like that, they certainly don't want to get caught short on other semiconductors. So it's like, fool me once, but don't fool me twice. I'm going to make sure that I have all the other semiconductors I need, even if I have to stick them into inventory, because I don't want to get caught on another critical component further down the road, just because I'm trying to meet my demand perfectly. I think also that the general sense that DRAM is getting tight, and that there's going to be some undersupply. I think that is prompting folks to maybe make decisions about buying DRAM that, in history they would have said, look, I can't ship my phone because I can't get this this power semi, so I'm not going to buy the DRAM for it. Whereas today, I think, with concern about general availability of DRAM in the second half, and even into 2022, those companies are continuing to buy based on their sort of shipment plans. We're also seeing companies building extra inventory. So if a company historically maybe only carried 4 weeks of DRAM inventory, we're seeing that bleed up a couple weeks to 5 weeks or even into 6 weeks, again, as a hedge to make sure that they don't get caught without, but also because there's a concern that DRAM is going to get short in the second half, and they want to build inventory. Now, whether this inventory is immediately sort of consumed and shipped out when the market gets a little bit better supplied, that's to be determined. But I think there's a reasonable chance that, sort of the average inventory held at least for the midterm, until all of these concerns about semiconductor availability, I think there is a reasonable chance that DRAM inventories across the supply chain will just elevate a little bit and remain elevated. And sort of somewhat related to the question is this idea that there's just tremendous demand for semis across the board. We've heard the Capex numbers out of TSMC, what they plan to spend. And while customers, might not see this directly, what that means is that there's increased competition, as I alluded to earlier, for all of that fab equipment. And that could potentially limit how much DRAM could grow bits sort of into 2022 and even into 2023 timeline. And so longer term, the shortage across all semis could have multiple impacts from multiple different angles on DRAM. But we're certainly seeing it already in the way that customers are continuing to buy and continuing to build inventory.
Thank you, Mike. So maybe one last question for you, Walt. How do you see the controller shortage impacting the NAND market?
Okay, so I think Mike touched on a lot of the key kind of high level dynamics, and so I won't discuss that again. But specific to NAND, obviously controllers are very key to a lot of the biggest NAND segments. So both client and enterprise SSDs, eMMC, UFS, eMCP. So it's a huge issue on the NAND side, and the shortages are causing a lot of confusion right now in the market, and it's been an issue for several months, and then it was only exacerbated by Samsung shutting down their Austin fab, which supplies a lot of its internal client SSD controllers. So it's right now I'd say the shortage is helping drive NAND price increases in Q2, and it's not just the fact that there's actual shortages, which there are some, but it's also a lot of psychological impact and fears that there's going to be some severe shortages later in the year. So that's leading to inventory builds today. Now, whether or not those fears are going to prove to be correct, it's the feedback that I've gotten has mostly been pretty mixed, but I'd say generally the suppliers feel pretty good about their own controller supply situation. They can utilize their existing inventory as well as kind of promised supply that they have coming from the foundries. But there has been a real impact to the market, and it seems right now it's been most pronounced in lower density client SSDs. So that's going to be impacting a subsegment of the PC market, as well as low density eMMCs. So that's also going to impact a subsegment of the smartphone market, as well as Chromebooks. In terms of when this controller situation gets resolved, again, if I kind of had to summarize what I've heard from the supply chain, there's at least a pretty strong hope that things are going to normalize in the second half of the year. Certainly, Samsung's fab's going to be back up and running, probably this month. And there's also been, comments around the memory players. These are huge companies, and they're likely going to receive priority at the foundries. So, Mike talked about kind of a general semiconductor shortage, and that's true. But there's going to be an order to when, certain products are prioritized, and we think the memory players will likely, be pretty high up on that list. So I think it's probably things are going to get better as we go through the year, and potentially, maybe we'll exit the year with things fairly normalized, at least from a memory perspective.
Okay, well, thank you. The live market briefing is now ending. So thank you again, Walt and Mike, for your time and your analysis. To everyone, you will soon receive an email with the link to the presentation within 24 hours. Feel free to share the presentation with your colleagues. And finally, please let me remind you that you can find all our reports, tracks, and monitors on our website, www.i-micronews.com. Do not hesitate to contact us if you have additional questions. Thank you all for joining us today. Have a good day and take care.